I am here to tell you one thing. You won. Those of you with diamond hands, those who didn't hit the sell button during the panic, you have just survived the most massive coordinated algorithm assault of the last decade. Subscribe to learn more. Our investigation is just getting started. January 2026. The last few weeks have been a nightmare for your nervous system. You opened the charts and saw red candles. You saw media headlines openly mocking silver investors. Wall Street analysts were screaming that the squeeze was over, the bubble had burst, and it was time to leave. But look at the data, not the price. These were waves on the surface, not the tide going out. What they tried to sell us as a market crash is known in professional circles as wash trading. Look at the volumes. Trading volumes on the drop were minimal. This means the real players were not selling. It was banks shuffling paper contracts from their left pocket to their right, creating the illusion of a mass exodus to scare retail investors. The Silver Sentiment Index dropped to 8%. This is the zone of extreme fear. Historically, it is from this exact point, when the crowd is terrified, that a vertical reversal always begins. So what is actually happening? This is not just trading. This is an aggressive takeover of the global resource market. While the West is desperately dumping cheap paper to maintain the illusion of stability, the East is silently and methodically taking all the physical metal. And to understand why this is happening right now, we need to look not at the monthly charts, but at 500 years of history. What is happening to the United States today is not an accident. It is a rigid historical law, a pattern that has executed 3 times in the last 500 years and is now completing its 4th cycle. In the 1500s, Spain drowned in debt and conflict. Capital fled to Genoa. In the 1600s, Holland played with financial bubbles. Capital moved to London. In the 1900s, Britain, burdened with massive debt, lost its reserve currency status. Capital moved to New York. January 2026. The USA has officially entered the final stage of this cycle, the stage of Imperial Overextension. Look at the numbers. Official forecasts predicted a national debt of $38 trillion. That was misleading. The reality, factoring in a $2 trillion annual deficit and compound interest, is already storming the $41 trillion mark. We have reached the point of no return. Economists call this the Minsky moment. Interest payments on the debt, just servicing the loan, have reached $1.7 trillion a year. That is 40% of all the country's tax revenue. Think about that. The system is spending nearly half of its income just to pay for past mistakes. There is no money left for development, medicine, or infrastructure. Neither military power nor AI technology saved previous empires from math. The laws of economics are the same for everyone. Right now, we are witnessing what analyst Zoltan Pozsar called Bretton Woods. The old system, where currencies were backed by debt, is fading. The new system will be backed by commodities. And that is exactly why we are seeing the 3rd stage of the cycle, the silent exodus. Smart money, BlackRock, sovereign funds, insiders, see this pattern better than we do. For the first time in 75 years, they are quietly, without noise, moving capital out of dollar assets. They are exchanging paper for resources. And for them, silver is not a speculation. It is a lifeboat. But where exactly is this money running to? The answer lies in the wealth transfer mechanism we will analyze next. Where is the capital fleeing Western bonds actually going? It is flowing into real, tangible industry, and the center of this gravity is not New York, but Shanghai. Look at signal number 3. This is the Chinese solar monopoly. Today, China controls 80% of the world's solar panel production. Without specific silver paste, these panels are just pieces of glass and silicon. They need physical metal, not paper futures. And here lies the detail that Western analysts missed. In 2025, China massively shifted to new panel standards, TOPCon and HJT. Remember these acronyms. Unlike older technologies, these panels require 50 to 80% more silver for every watt of power. This is not linear demand growth. This is an explosion. In 2025, on top of their own massive domestic mining, China imported an additional 3,800 tons of silver. They are literally vacuuming the market. This creates a phenomenon we call the Shanghai Premium. Right now, the price of silver on the Shanghai Gold Exchange is 12 to 14% higher than in London or New York. The gap has reached $7 per ounce and continues to widen. What does this mean? It acts as a giant air raid siren calling all the physical metal in the world. If you are a Swiss refiner or a Mexican miner, where do you ship your bar? To where they pay $77 or to where they pay $84? The answer is obvious. All available metal is flying east. The arbitrage window is wide open. And here's the grand irony, or if you prefer, the mechanism of redistribution. Western banks, by manipulating the price on the exchange and smashing it down through paper sell-offs, are effectively committing strategic self-destruction. The cheaper they make the paper price in dollars, the cheaper China buys the real strategic resource. The West is subsidizing the industrial dominance of the East at its own expense. This is the largest transfer of wealth in history, and it is happening right before our eyes. How is the West reacting to the metal flowing east? They cannot print more silver, so they do the only thing they know how to do. They change the casino rules to kick the players away from the table. Look at the events of the holiday week. While you were resting, the exchange made a critical move. They suddenly hiked the initial margin requirements for silver from $21,000 to $25,000 per contract. That is a jump of nearly 20%. But worse, they also raised the maintenance margin. What is the goal? This is a classic shakeout. They know thousands of retail traders are holding leveraged positions. By hiking the margin, they artificially trigger a wave of forced liquidations. They force you to sell so the banks can cover their positions cheaply at your expense. The conclusion is clear. A margin hike is an admission of scarcity. They have no physical metal to suppress the price honestly, so they use administrative force. But there is a force that even the exchange cannot control. The geopolitical floor. Blockades in ports and labor strikes have sent energy prices soaring. Diesel and electricity are the lifeblood of the mining industry. Let's look at the mining math. The all-in sustaining costs for mining giants have already risen to $24.28 per ounce. But that is just sustaining old mines. For an investor to fund a new mine, the price of silver needs to be at least $70. This is called the incentive price. This is the concrete floor. Banks can manipulate paper, but they cannot push the price below $70 for long. Why? Because if the price drops lower, the mines simply shut down. Mining becomes unprofitable, and with the current deficit, shutting down mines means instant collapse for the supply chains of tech giants. The market is squeezed. From above, bank manipulation presses down, but from below, the cost of reality holds it up, and reality always wins. Now that you understand the game, let's map out your action plan. Let's start with what will happen in the next few hours. At this moment, be careful, as it could be a trap. You will hear calls from major houses. Take profits, the rally is over. Do not believe it. This is a classic deceptive move. They need liquidity to fill their buy orders, and the only way to get it is to scare you into selling. The banks see the stop-loss map. A massive cluster of sell orders sits at the $68.50 level. Expect them to intentionally push the price down there on Monday, creating a sharp drop to trigger your stops, take your positions, and only then will the market fly up. Advice: remove your stop losses. In this volatility, they guarantee a loss, not protection. This should serve as your true indicator. Stop watching TV news. Watch Shanghai. If the Western price is dropping, but the price in Shanghai is rising or holding steady, that is proof of manipulation. Trust the Eastern price because it is backed by physical demand. The key level we are watching is 82.60 Sanvin. Once we close above this number, the algorithms will flip. We will see a vertical ascent to $100 in a matter of days. In moments of financial storms, the harsh 80-20 rule applies. 80% of wealth will transfer into the hands of 20% of the people, those who own real resources, gold, land, production. Holders of paper funds will receive cash settlements in depreciating currency during a crisis. Holders of physical metal will retain real purchasing power. Choose which group you want to be in. Use the flag theory concept. The world is becoming fragmented. Do not keep all your eggs in one basket. Keep citizenship in one country, business in another, and assets in a third neutral jurisdiction. And pay off your debts right now. Inflation will pull interest rates up with it. Variable rates on loans will become a heavy burden. Free yourself from obligations to the system. And finally, your ultimate asset, the one that cannot be confiscated, is your skill set. In an era of turbulence, survival belongs to those who can create value, not just consume it. We stand on the threshold of a historic shift. For the first time in 50 years, the West is losing control over the pricing mechanism. The printing press is losing to the laws of physics. In this global game of musical chairs, the music has already stopped. And the harsh math is this: there are not enough chairs, real physical metal, for everyone. When the panic becomes obvious to the masses, the doors will lock. Silver today is more than an investment. It is a vote. It is a vote against a system that devalues your labor through inflation. It is a vote for honest money. Right now, you face a simple choice. You can remain holding a beautiful ticket to a concert that is already over, holding the paper currency of a fading system. Or you can secure your seat and claim a piece of real wealth. History does not forgive those who wait until the final second. The silent exodus has already begun. Make sure you are not left standing on the platform. This is new era economics. The analysis is done. The choice is yours.